Learning means understanding different behaviors being at the same condition. Intelligent is defined by how many times am I applying these different approaches to get out of the current condition. That means if you are still broke and you're trying out different kind of trading strategy, the more strategies you tried out over an extended period of time, there are always two factors. The one is force, brutality with the trading strategy. The other one is time. That means saying, I tried out 5 trading strategies within this week, and each trading strategy you tried out within 2 months, for example, consistently. And every time you were holding yourself to the trading strategy. And this is what makes intelligent. That means when you just watch this YouTube video, as here, for example, and you did not apply anything, actually it's just called being still dumb. So what is very important is in this video, I'm going to show you something, because within 7 months, we have people within the first or second year, they start trading with a real $2,000, $5,000, even $20,000 or $50,000 account using this method. I'll show you some results from some students, how I work with them. And this video is also a full trading strategy that you can use to apply. So watch this video over and over again. Take some notes. We're going to start first because I have here some notes. That's why I'm looking to the right. We're first going to start why most trading strategies are not working, even though you apply with force and also on specific time periods. The main reason is because they are not complete. Mostly the strategy is just a tactic. A strategy means you sit down on the computer between this time frame for 1 or 2 hours, and you're going to look forward always to see the same pattern, for example, or like you're only allowed to place 2 trades a day. You're only allowed to place 4 to 7 trades a week. You're only allowed to trade using this method like this. And then this is, for example, a trading strategy because it tells you exactly what to do, how to do it, with some flexibility inside. But most trading strategies you find out there are just like, here's your orange line, and when there's a green candle and it touches, then you must buy with the real money account. And this is not how trading works, because when it comes especially to day trading, it is all about where can I see the market is going at, step number 1. Do I have enough leverage? It means, because for example, we trade the S&P 500 futures. Leveraged, it means like it's 240 or 270,000 US dollars. There are specific providers. You only need to show you have $400 on the account and then the $3,000 on the account. And then you can leverage $250,000 in the market. That means within a week, when we trade like 2 or 3 times or 4 or 5 times, depends how much time you have. Every time you sit down on the computer for 1 or 2 hours to these trading hours, you can see that these moves you see are worth thousands of dollars. So now it's literally making more sense to take from these $1,000 moves, taking $500, $800, sometimes it's just $200, just that there's enough move inside. This is something what is very important. The second thing is, if it's not a problem anymore to see that there are multiple $1,000 moves, then it's of course making $1,000 not the biggest problem. The biggest problem is losing more than $1,000 while making the $1,000. And this is where money management comes inside, and the trading strategy, by the way. So what we talk about is money management, because I think the constraint, you need always to remind yourself why you started trading. Was it for money so you can have time? Was it for the money so you have time for your family, for example? Like, who are you doing this really for? Why are you watching this YouTube video? And what is the reason you did not apply yet? Did you had not enough informations yet from somebody? Or was it just you just didn't felt like you had a sort of feeling that it was just not the right trading strategy? It was not the right people. It all starts by having a routine, and the routine you can only apply when you have also the right people around you. That's why make sure you have a community. If you need one, I have one. You can just go under this video, for example. You can join up there. You ride with me also in person. And it will also always be like that I will be always in front in the social media. That means that you ride with me in person, that I'm literally there. Because I think trading you cannot learn just over videos. It is literally about this one exercise that you get. This is what I mean with brutality. And you do this exercise for 1 or 2 weeks, and you always do the same exercise. And I have something prepared for you. You can start under this video as I just explained. And this is where we get results with the students quite fast to see first the cash flow as I just explained, by seeing multiple times these $1,000 moves. So when we have a $3,000 account, we take, very important, because it's a leveraged market, we need to take off that $400 to enter the market. And then when we enter the market with one position size, it's called, what is $240,000 to $270,000 leverage, it means we can adjust $100 and we can make $500 for each move. It works like this, that when we enter the market with one position size, it means as if we have bought like this one share of $250,000, $270,000 US dollars. It's insane. And then when the market is just going up, what it does each couple of 5 minutes, 20 minutes, 30 minutes, multiple times, you find like every 10 to 20 minutes, $200 moves sometimes. It's insane, like 4 to 5 $200 moves up and down in combination. It's just like back and forth sometimes. Sometimes it's more one-sided, right? The market always runs different. And now it's then to use the stop loss. That means if the market goes in my direction, I'm going to be able to take, because I can see multiple times thousands of dollar moves, $1,000, $2,000, $3,000. I'm going to adjust just the stop placement always, to adjust it always to $100. I'm going to show this to you also on the chart, but I just want to explain it to you that you understand with the money management, because the constraint of each trading is a business, is very important that you understand that, and we want to grow our money. And the thing is not just, it's not about making 5 times in a row $100 and then losing $50. It's more like about making 5 times in a row $500 maybe, or 2 times $500 and losing now 7 times $100, because this is realistic. In the internet, you find very often unrealistic expectations that you need to have always win, 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 loss, win, 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 loss. But on the practical side, somebody who never traded yet with real money, who never made yet $20,000, $50,000 annual minimum, consistent, then the problem is that he will lose multiple times in a row. And this is why the risk reward ratio is so important, that it's all about, if I'm going to sit down for 1 month, can I see 20, 30, 40 trading signals? This is something what's very important. I'm going to show you this one now on the PC here. And these 20, 30, 40 signals, I got many of these, but I'm going to use this one. I used this one on another video already, but I think like this is just a very nice example, because it's all about, can I see 20, 30, 40 opportunities you can see here when trading just 1 or 2 hours? That's just what is very important, because now it's about like, oh, I sat down for a month, for example, each time 1 or 2 hours, and I saw 18 plus 8 is 26. I saw 26 opportunities, for example, that it's possible to trade it. This is from a trading student, by the way, who's just learning since 2 months this trading strategy. And as I just said, under this video, you find your first exercise to literally get this one first done. I think it's just very important that you understand, like you saw 18 times it was possible to adjust $100 and to make $500. You saw it, you did not trade it. And then 10 times you saw it did not work under specific conditions using the trading strategy, what I most use using a 1-minute chart. That means, can we see that the market is going up? Can we see where the market is going at and has then issues to continue, for example? Like sometimes it's just going to wiggle around, and this is exactly where people start losing money. Except there's enough pressure, then it's good to trade it in the continuation, it's called, like in the same direction. And if that's the case, it's just about spreading money, understanding money management, as I just explained. And as I just said, main constraint of a trading account to grow is, I think, always the risk reward ratio. It needs to be 5, 6, 7 in average. 5 minimum should be an average. So sometimes we use $100 and just make $400, but mostly it should be $100 to make $500 an average. And then we can lose 6, 7, 8, 9 times in a row. If we just have 2 winning trades, we start making money, something that is very important. So this is something what's very important. You see here in the middle, it says here color switch. And color switch means this is the trading setup, because when you have a 1-minute chart, you have literally 60 candles within 1 hour. If you trade 2 hours, you have now 120 candles within 1 hour. And this is absolute cool. Here's a trading student of mine. He's within the first year there, a couple of months now learning. We started this year. He had no clue what a green candle was correctly, or red candle, like how it works, how it was opening, how it was closing. No prior experience with trading. And you can see here within this week, or last week it was, he saw 5 trades that 3 times it was working to adjust $100 to make $500. He saw 2 times it did not work to adjust $100 and make $500. And then he traded 7. That means he saw 12 trades within this week only. if you just make it divided by times 4, for example, those are like 30, 40 trades, minimum 25 trades he will have each week, each month. And this is something what's very cool. And then because he can see like what's working, what's not working, how's the market condition right now. This was the reason why he took then 7 trades. That's quite a lot, but I think it's okay for the beginning because he needs to have the experience. Practice makes perfect, right? Especially on a demo account, on a real money account. Practice blast the money away. That's very important. That's why we have a demo account. And you can see here he placed 3 trades. He made $1,412. He had 4 losing trades with $312 loss. That's pretty cool. And he made $1,100 for this week. And you can see here on the right side how much he was losing. He lost here $25, he lost $87, he lost $125. But then he made here, something very important, he made $425. And somewhere here he made also like another trade. Here it is, $612. It's just because it's green, because this one should be actually black, right? So when you look at the picture, this is what I mean with the 3 steps. This is something what's very important. Always using one market, because if you have 20, 30, 40 trading opportunities, I mean, it's just one market. It's literally enough. It would be too much using another market. Each market has a different personality. And this market has 2 times a day maintenance times, like 15 minutes one time 45 minutes. It's pretty cool. The advantage of trading this market is literally that it's consistent in the moves, that it has revenue shares. It's the 500 biggest companies in US America, and US is right now the strongest currency. It's literally the best market for day trading is the S&P 500. So first of all, he sees the market is going up, for example, market goes up. And when having enough leverage, when just buying here one and the broker just wants $400 for us, for example, this would be a $2,000, $3,000 move as you see here for one time. And this would be a $1,000, $2,000 move for you for the second time you see here. So this is just something that you understand that it does multiple times, like each hour it does enough moves. Sometimes it starts here in a consolidation phase, it's called, it's not moving enough. But when being on the trading hours, what you see here within this orange area here, you see here multiple $1,000 moves. Here multiple $2,000, $3,000 moves, like up, up, up. Here you see $1,000 or $2,000 moves up and down. And here again, and this is something where it literally starts. And then do you see right now the market is going up or down? Because the market is always changing itself. It depends not on your experience, what you gained the last 5 years only. It is also the experience that you gained the last 4 or 5 weeks. Because every 2 or 3 weeks, that's why using different kind of trading strategies are good. But you need to make sure you use the same trading strategy for a minimum of 1 or 2 months. 2 months are better, because there will be same market conditions that the trading strategy will not work that well. And then there will be same trading conditions that the market will work very well. And based on reading, as I just said, you need to read, not just to trade on a demo account, you need to read a lot, 20, 30, 40 opportunities, and then you compare them between last 2 weeks, last 3 weeks, last 5 weeks, and so you can have a picture of today, how the market is looking like right now. And this is something that's just very important with common sense. I see so many traders with a trading strategy, they only have 5 trading opportunities a week, they have only 5 trading opportunities a month, and this is the main reason why they stay broke in trading, why they feel also forced to trade every trashy signal they get. It's just because they don't have enough quantity yet. It all starts with quantity first, with the risk reward ratio of trades. Very important, always color switches, always the same setup signal, always the same market. And then we can go on with quality. And quality just comes in, I think, like starting $200 or $500 a trade. So until $100 a trade is just quantity, the current understanding, the current day, the current week, the current month, in comparison to today, tomorrow, and next week. This is something what's very important. So you see here literally like he sees the market is going up. He's expecting this year would be a $2,000 move. This year would be a $1,500 move. He would be a $500 move here on the right side. I know my screen is a bit small. That's why I'm going to copy paste this one and make this one here a bit bigger. And now you see here red candle, green candle, entering the trade, adjusting $100 here. It works like this. In trading, you have a position size you can select. If you want to buy 1, 2, 3, 4, for each position size we buy, we need $400 on the account, for example. We will leverage with $270. In this case, one position size is already around $100. For example, when entering here the trade and when having a stop placement here, this might be, for example, $100. But then the same length here down would be $200. Sometimes we have a small green candle like here. That means when entering here with 1, this one would be only $50 because it depends on the length and position size, how much money is adjusted with the stop loss. That means here we would need to have two position size to buy and then to adjust here around $100. But from here to there, as David just did, it's just one position size to adjust $100 as he just did. And then you can see here this $450 move as he was just trading here, right? So that was here, this trade that he did. And then you can see here the next trade was up here. He traded a red and a green candle. Main reason is just because if you see that the market is doing retracements, that means when you see that the market is coming back within specific lengths, because the market has recurring patterns and very often it's for days and weeks, very consistent. You see here that the market does same length from here to here. And then the same length also from here to here, like just like a minimum length that you can see here. Like number one is different, but number two and number two has here around the same length. That means number two length would be here. If here's a green candle, I would understand that he would buy, for example. But here, for example, he was buying when using now the quality thing. But the thing is, like, you can see also a lot of green candles, what I actually like, why he was buying here. A main reason is just like when you see like the market is wiggling around here within this length here, check this out. He was even seeing this one, and this is just experience that he does not have. This is around the same length here, and this is where the market starts popping up. We have a fixed rule set, and it says that's why I think it's okay for the beginner to trade here. When there are a lot of green candles, it's okay to trade. When the market even does the same length back from here to there, you see here, even though there's a green candle or here, we don't start trading. We make sure market starts to print a lot of green candles starting here. And then we start trading maybe here, color switch here, wherever it is, especially when the market starts going higher. That's why like here are very nice color switches, very small. The smaller the chart, the smaller the stop placement, the better we can adjust your $100. And then aiming, of course, for a bigger structure high. So 3 steps in conclusion. The first one is understanding what direction the market is going multiple times, $200 moves within 1 hour, maybe 4 or 5 times. You want to have a good market like the S&P 500 and the 1 minute chart. So you have enough signals. Second one, once you can identify and understand within 10 trading days hours in what direction the market is going, can you have within a week like 10, like can you have like 8, 15 opportunities to adjust $100 and you can see that the market makes $500. In the beginning, the most easiest part, instead of like opening a chart and just doing it live, because you need to understand first, how does the setup look like? The best exercise would be if you and this is something what you learn also under this video, is that the best thing is like, can you see that the market is going up or down? And you watch this for several days. And if that's the case, then you zoom in and then you look here for color switches first on the dead chart and just say like red, green means that the market is going up. Here you have a red, green, here's red, green, here's red, green, here, 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 here. Like you have here so many red greens. That's 1, 2, 3, 4, 5, 6, 7, 8 opportunities. When adjusting $100, we would make $500, by the way, until this area here. The last one, number 8, would have not worked. But you can see here the other ones with adjusting here $100 in a row, they have worked. And this is the cool thing using this trading strategy, because you can see here, oh, this one works with $500, this works with $500. And then in between also this and this here would have been $500. And then you say like, oh, you see 4 times it works in a row. You assume like if you trade here for 1 time or like a second time here, that it still goes on work. Because in trading, it's all about reading, having a perception that something works. And that's why you need to have enough quantity first before you go with quality of trades in comparison from today, last 2, 3, 4 weeks, 5 weeks even, in comparison to today, tomorrow, the day after, and next week. This is something what's just very important. This is the most money-making activity. If you can see then 20, 30, 40 trading opportunities as I just showed to you, I think this is where most people are not using $100, adjusting $100. It means when you have something to write. A red and a green candle means the market wants to go up for us, and a green and a red candle that the market goes down. And using TradingView, there's always on the right side a timer that will show you when the candle is closing. And it's very important that the candle starts closing. Here on the right side, you can turn on a timer and then it counts down within 1 minute hours. And it's very important to trade always closed and tiny candles to adjust $100. And it makes sense within the move, how the market was moving each 10, 20, 30, 40 minutes in average, that it could be a $500 move and the stop placement small enough that there are also a lot of green candles when trading up, a lot of red candles when trading down. Start applying. Hope this helps. JT out.